day, everyone. The war in the Middle East is still the key factor right now, and we're seeing that in Bitcoin and the altcoins too. All the possible breakout scenarios are still on the table. In the next few minutes, I'll talk with Oliver Michel from tokentus about which one is starting to look more likely, how coins did last week, and what to watch for this week. Great to have you, Oliver.
Hello.
Not that long since we last saw each other. Saturday at Investor Day, we'll pick up on a couple things we already talked about then. Quick look back, last week at least the first half was pretty solid for Bitcoin, but it slid again toward the end. We also saw the US ultimatum on the Strait of Hormuz get extended, then extended again, and that does chip away at Donald Trump's credibility a bit. But the big thing is, you still can't underestimate it. People keep assuming Trump will back off, do the whole taco trade, and then take credit at the last second. But it can flip pretty fast. What are you expecting?
Yeah, it's all or nothing, Johanna. The tension's rising, and it'll be interesting to see what moves the Americans, the Israelis, who are also part of this conflict, and the Iranians make this week. And then put it out there. At this point, pretty much anything can happen, sure. As tensions rise, uncertainty goes up, and with it, volatility. We'll definitely see that over the course of this week. Anything can happen, like I said up front. All options are on the table. It could end, the current stalemate could drag on, or it could escalate even more. And depending on which of those three plays out by the end of the week, markets will move down, sideways, or up. That's just where we are right now, unfortunately. We've got to live with it. And yeah, it'd be great if we could get back to trading on fundamentals at some point. But for now, that's how it is. So it'll be interesting to see how this week ends when the ultimatum runs out on Friday, because I don't know if they'll extend it again.
Or you just slap a headline on it, the war is over, I got everything I wanted. Of course, both sides would have to go along with it, but let's first take a look at the FedWatch tool, because besides what's happening in the Middle East, there are other factors too. We've seen over the past few weeks the market isn't expecting a rate cut this year, at least not under Jerome Powell. Well, that's supposedly happening in May. He'll have to step down. Kevin Wall will take over. So for now, we can only take it as it comes, but we're watching the mood around the Fed really closely, and of course how the Fed chair is holding up. He did an interview yesterday at Harvard University. What were the big takeaways from this interview with Jerome Powell?
Yeah, on your first point, you can see it right there. Nothing's happening. We're staying at the current rate, and if you extend that out, it keeps going all the way to October next year, when you finally see the first drop of 25 basis points. So yeah, like you said, as long as Jerome Powell's in charge, nothing's going to change for now. He was at Harvard last night doing an interview, and I kind of get the feeling he's enjoying this.
Just holding still, right?
Yeah, just watching how all of this plays out, because most of the balls aren't in his court, they're with the US government. I want to hit on three things he said last night. The first was, inflation isn't totally beaten yet. For him, that's basically great news, because that was his main goal, which is why he's been cutting rates so carefully. But then he also says the economy is still strong enough, that he doesn't see any quick, hectic rate moves at all. He also said the labor market is stable, though where he's getting that from is another question. He also brought up something else which I thought was pretty interesting, because we talked about it 2 weeks ago too. Private credit, basically the loans to companies. He mentioned it last night and said the Fed's watching it really closely, because there's a problem brewing there and they're going to keep an eye on it. But the most pointed thing he said to me was this. He was sitting there and said, this huge mountain of debt in the US at record highs and growing every day isn't really the problem. What you really need is for the country's economic growth and its debt load to stay in balance. And for that, you've got to get the economy going. But he said that's not his job, that's somebody else's. And if they don't pull it off, he thinks the future looks pretty dark. So yeah, that was a nice little arrow at the US government. Do something. So the economy does better, GDP and all that. Everything looks pretty negative, and I actually found it really interesting. He was way more relaxed than at his press conferences, because he knows his time's almost up.
Basically, he can hand off the baton pretty casually. But it's not just the US government's job to keep the economy going or to juice it. Sure, the Fed has to focus on price stability, but it also has to make sure the economy doesn't totally fall off a cliff. It's kind of contradictory that he's putting all the blame for...
Yeah, but why is only Donald Trump allowed to be contradictory? Paul.
Der Paul darf es auch, nur
der
der
macht
macht
abgeschaut oder was?
Paul just does it a little more responsibly, I'd say. But bottom line, Johanna, I still think the economy is going to buckle. We've seen it with the GDP forecaster. And like we saw in January 2008, there'll be an emergency cut. And I think Jerome Powell has kind of hinted at that already, at least to a point.
But the reality is, right now, the Fed's signals don't really move the needle that much. Right now, it's more the headlines, like we mentioned, coming out of the war in the Middle East, and every day it's one thing after another. One thing after another. Donald Trump is talking about huge successes between the US government and Israel. Iran says it knows nothing and doesn't engage. And we could clearly see that back and forth in the markets last week too. Every time a new headline hit, no matter the direction, we got these swings, although it also felt like that resilience is starting to show up, like markets have almost gotten used to the war and all the loud back and forth, right?
Yeah, I don't know. They're still whipping up and down pretty hard. If you look at it in a rough timeline, we had last Monday, and I'm saying this because we'll see the same thing in the charts and the daily candles. Last Monday, that 48-hour ultimatum got extended by another 5 days, with Donald Trump saying we're having really great talks. The market took that in at first and moved up pretty nicely on Monday and Tuesday, but then more and more leaked out that they were still planning further military action, along with a comment from Larry Fink, who said that if oil stays above $100 for a long time and maybe heads toward 150, then we're definitely on the path to a global recession. And I mean, that's obviously someone whose words carry weight and people actually listen. Plus, the ultimatum got extended again last Thursday until April 6th, so Friday or Saturday this week. And again with the line, these are good talks. That make an extension like that makes sense. And like you already said, the Iranians say they don't know anything, but that's all just the news level. What's really happening behind the scenes, nobody knows for sure what's going on. The fact is that triggered the whole military action talk, then Larry Fink's comment, then yet another extension, one you might want to question. And with the weekend coming up, when you can't trade while the market reacts, while Donald Trump can still do his thing, prices dropped, the US indexes fell, and yeah, that got confirmed on Sunday. It really is the case that 3,500 US soldiers, among them 3,500 troops, are on their way to the Middle East. And that basically confirms what we'd been assuming here. After the high early last week, we got a drop. Into the end of last week, Yeah, and yesterday it was again, we've made big progress, we're on the right track, and I got huge gifts. But if I'm not successful after all as the US government, as Donald Trump, then I'll tear everything down. That landed with mixed feelings, first positive, then negative. And overnight, the Wall Street Journal put out that the line being floated is, they'll end the war. Like you said at the start, they'll end the war regardless of whether the Strait of Hormuz is open or not. That's for the people to deal with, the ones who suffer if that strait gets closed. And in the end, that led to the US pulling out of this whole thing, which of course means US linked stuff like the US indexes and especially futures. And our coins are somewhat in the green this morning. So you can see here what's true and what's false is on different sheets of paper, but it goes up, it goes down, it goes back up again, and no US index can dodge that. And sadly, our crypto market can't either.
What do you mean by the Americans pulling out? Like, are you saying the people who get hit harder by oil prices shooting up and the economic crises that follow matter less to Americans because they export oil themselves?
Yeah, that's exactly it. After us, the flood. We hit our goal. We wanted to stir things up a bit over the nuclear angle. We reached that goal. We bombed the country back down to a certain level, so to speak. And yeah, we obviously kicked off a global mess by closing the strait, but that's just how it is, and it's not our problem because we've got our own oil. The US is one of the biggest oil producers, and why should we care about an issue with the shipping lane? Let the ones who've got a problem with it deal with it, and that's mainly Europeans and the Asians, especially the Philippines. They're basically already shut down.
It kind of reminds me of my kids sometimes. One of them knocks something over in the other one's room, walks out and goes, "All right, your problem now, you fix it." But sure, the US will get hit too if the Strait of Hormuz really stays closed longer. You just mentioned Larry Fink. Oil prices are rising, not just Brent, WTI too, which just climbed above $100 for the first time since 2022. And all of that is going to show up over time in the already shaky US picture, even if John Power says the labor market's fine, with all the rough headlines coming out of the States.
Yeah, we're explaining this because even though it's happening on a global economic level, it has a brutal impact on our crypto. With stuff like this going on, we shouldn't be standing here expecting that crypto or Bitcoin to just blast off. More like, and we'll see it in a second, a cautious sideways move, a little up when something positive hits, a little down when something negative hits. So with our crypto, and that's why we're here, we're not on the sidelines. We're right in the middle of it.
Still, let's take another look at the regular news flow, because hopefully the war between Iran, Israel, and the US will be over soon, and then we can hopefully get back to business as usual. But even then, there are still a couple hurdles to clear. And this week, we've also got the usual economic and cycle data we'll be watching. US labor numbers are coming up. We've got the private sector ADP employment report this Wednesday, so basically tomorrow. JOLTS, the job openings data, comes Thursday. And the one we always watch, non-farm payrolls, which last time were anything but pretty. That's on Friday. It's usually like this. The first release doesn't look that dramatic at first. Then you keep reading and see what got revised and how it actually stacks up against the previous numbers. So that ultimatum could still bring a whole wave of stuff that'll affect us, affect the economy, the indexes, and then
Ja, laut Paul stabil ist und gut ist.
and then it'll
Arbeitsmarkt ist auch
Stable and solid,
gut.
and that last year only a few tens of thousands of new jobs got created in a country like the US. That really doesn't matter much. So
Aber but like you said, Paul won't be in
sagen.
that chair much longer, and he'll take the blame for it. The whole news situation both with the war and everything going on around the economy, is obviously showing up in the US indexes too. Today we're going to look in quotes only at the Nasdaq and the Russell. But we'll start with the Nasdaq and the daily chart. First up are the support levels that should hold now.
Exactly. So today we're only looking at the Nasdaq and the Russell. The Nasdaq matters for our crypto. Everybody knows that by now. That's the Nasdaq move on the daily chart up at the top. And we've been hoping for a correction, and the correction came. Ideally, that correction would have held right here at 23,800. But like you can see, it unfortunately broke through that last week. Here's the start of the week. It went up, then it dropped 3 days in a row, and yesterday was pretty clearly red again. So now the question is, where are the next support zones the Nasdaq could drop to, and where's the max, the ultimate support that it really shouldn't break below? Because we also know we're talking about a potential rollover in this whole thing. So which support zones do we need to watch? 23,800 didn't hold, like you see here. The next support area is between 23,000 and 22,600. That's this ochre-colored zone here. Based on this low and this low, if you extend it, you end up right here. And Nasdaq dropped into that exact area yesterday. Like I said, tied to the Wall Street Journal news overnight, Nasdaq futures are already up about 1%. That actually looks pretty solid. So it'd be great if Nasdaq turns around in this zone and starts heading back up.
Let's also look at the weekly chart again. Sure, all these tech names, especially the ones focused on chips and building big new data centers, that costs a ton of money. It's usually financed with debt, and if rates aren't playing along and leverage is high, it gets harder and harder. You just mentioned the first support. But if this scenario, which is obviously being fueled by the war in the Middle East, ends up breaking that last support, there's another level from a technical standpoint. Which one?
Yeah, if we get some positive news out of the Middle East, then it could definitely turn higher from the support we just looked at. If the ultimatum runs out and that kicks off another real escalation, then yeah, it'll keep sliding. At least in some form, depending on how fast this ends up repeating. And you can see on the weekly chart where that could lead. Looking at the Nasdaq, I pulled up the weekly charts for the Nasdaq, the Russell, and the DXY, which we'll look at in a second. Like we know, Bitcoin bottomed here in October 22. And from here, the Bitcoin bull market started. And you can see the Nasdaq also had a bull run, a positive move, similar to Bitcoin. And you see the same thing here too. That was the bear market. In Bitcoin, so you can see there's a pretty clear lockstep. That's why we watch it. And what you see is we had a high here and dragging that high across on 02/1825. When we had that tariff situation, when tariffs first hit the table, it dropped and basically formed support of that prior high. And I'd like to use that same analogy here too. We had a top. And if you extend that line across, you can see around 22,200 points. There's a matching resistance. Support that should be there. And that's what I'm assuming. It could drop to, doesn't have to, but it could. And if it does, it should definitely stop around there and turn back up from that area. The Nasdaq's sitting right on a really critical support level around 22,200. We always say we look at both sides, bullish and bearish. If we break below this, heads up, then we have to expect a rollover and we won't be making those new final all-time highs we keep talking about. But of course, we're also looking higher and higher means a final target of at least 27,000. Emphasis on at least, it could easily be 27,500 or even 28,000. But we should see 27,000. I'd like it to either move up now or at least start pushing higher from here. If it drops from here, then we can expect a rollover. In the indexes, not just the Nasdaq, but also the S&P and the Dow.
Let's look at the Russell first before we keep painting worst case scenarios. The Russell has support too, and it's right here. What zones should we be watching?
Same context here relative to Bitcoin, that's October 22. And that was Bitcoin's low too. That was also Bitcoin's high. So they had a bear move together and they had a bull move together. You can see the Russell didn't take off right away like the Nasdaq. It even tagged its low again, then moved up, and the tariff stuff caused a much bigger pullback than it did in the Nasdaq, S&P, and Dow. And if you head up here now, that's what we always watch, this area right here. So I've pulled it out a bit here in the weekly view. This is the first push-up correction, the second push-up correction. And to me, that's then the final push-up toward 2,800 points. Maybe a bit more, maybe it even makes 3,000. We'll see. If it does keep dropping instead, like the ultimatum runs out, things escalate, and we get a move down, then I can imagine 2,300 points as a resistance support level that could stop it. And from there, it could start moving up again. So either from here or from here. If it breaks below that, then we've got a real problem again down here too. From where Nasdaq and Russell are right now, down to the critical support zones, Russell could still drop another 5%. And Nasdaq is 4%. That actually lines up pretty well. It fits together nicely. Up to that point, down to the red line, I'm not worried, neither on the Nasdaq nor on the S&P. But if it drops through there, then we really need to think about it. And then we've got a similar scenario to Bitcoin, where we have to ask, is this the rollover? Did we enter the rollover? Are we calling it lower lows now?
We've also noticed the dollar's getting stronger again. Makes sense. When oil prices climb, the dollar usually moves up too. You can really see it in the DXY, the dollar versus other major currencies clearly. So what's it looking like there? How much higher do you think it can still go?
We've always talked about the DXY and Bitcoin moving in opposite directions. Just to frame it again, the DXY hit its high while Bitcoin hit its low in October 22, like I already mentioned with the Nasdaq and with the Russell, meaning the DXY went up and Bitcoin went down. Bitcoin bottomed and then climbed up into October last year, hitting its all-time high at 126. While you can see the DXY steadily dropping, we said our target was down around 96, and it got hit in 2 moves. Then it sat down in that range, and you see that vertical line, the start of the US-Iran conflict. And then it was obvious. People ran to the dollar for safety and liquidity. The dollar gets more valuable. We're still talking about the US petrodollar here. Oil goes up, the dollar goes up. Like you said, that correlation is there. And we have to be clear that if there's no rate cut, basically rates stay elevated, the dollar won't get any cheaper either. It holds at that level. It's a solid asset class. And you can see clearly how it's been trending up since the conflict started. And I expect the DXY to keep pushing steadily above. We'll climb over the course of this year, while with that inverse setup, our crypto will naturally drop in that inverse setup. But I think in the next few months, we've got a window where the DXWI, if it moves up at all, only inches higher, maybe dips back a bit, and we can use that window for a final run in US indexes to new all-time highs, and in Bitcoin too, maybe as a relief rally, and of course, an altcoin season. That's the vibe here, but after that, the inverse move kicks in. A stronger dollar, weaker US indexes, and weaker crypto.
All right, let's get to crypto, to Bitcoin. We'll come back later to patience and what kind of performance Bitcoin and altcoins can put up. We talked about it last week already. It's still stuck in this endless sideways range caught. We also talked about a bottom forming, and last week you said, yeah, we're working on a bottom, but it's not done yet. What about now?
No, it's still not done. So as of today, March 31, we're still stuck ranging, no way around it, like people always say in the comments. The bottom is forming. Hopefully it is a bottom, because we've been chopping around here for about 9 weeks. So a bit over 2 months. We dropped. That was the bear flag. Then we dropped again. And if it really is a bear flag, then we head lower one more time. That's the downside paths we keep mapping out. Like, if the war in the Middle East escalates, we're not just retesting 60,000. We could also dip into the 50,000s, the high 50,000s, where stop losses get hit and leveraged longs get wiped out. And that move took 9 to 10 weeks, and right now we've only been in it 7 to 8 weeks. So we still have
2 more weeks.
Maybe another candle or two, if it's about the same time frame as before. Of course, there could also be some good news out of the Middle East, and then the whole thing starts moving again. And then we get the move to the upside. The possible targets for a relief rally, like filling those CME gaps that are still open, are written down here. Then you've got the SMAs. That got broken to the downside, which is why people read it as bearish. And last but not least, the retracement levels we could hit. So yeah, like I said up front, if things get worse in the Middle East, we're going lower. Are we in a stalemate? No new info, it's just day after day after day, and then it just keeps grinding along. If we get positive news, de-escalation, a resolution, a deal, whatever you want to call it, then we go up. So we'll see how this plays out from here. On the Bitcoin ETF, we had about 300 million in outflows last week and 69 million in inflows yesterday. Bottom line, like we said last week, the conflict kicked off here. And you can see it was in the range before, and it's back in the range after too. Here's last Thursday and Friday that we talked about, which is why it dropped. Then you've got the weekend where luckily nothing happened, so it was pretty boring. We've got 2 green days now. We'll see how the week plays out, but saying right now if it's going up or down is basically crystal ball stuff.
Yeah, boring. You were in Munich with me. Let's look at Bitcoin on the weekly chart. There you can see we just had 2 red weeks in a row, so that probably hits the RSI pretty negatively, right?
Yeah, exactly. So the RSI right now is, for a lot of people, the indicator that gets the most attention. I want to break the RSI down into 3 points. The long-term RSI angle, which looks really positive right now, is what we've been saying for weeks. Whenever we're at the bottom of a bearish move, the RSI is super low because strength is clearly weak. And we've never had an RSI reading this low. And that wasn't just true at this low, but also in the 2 previous cycles, where the bottoms were in about this same range. And that these lows marked and may still be marking, like you said, a bottom. That's really positive because you can say, yeah, we've hit the bottom and from here it goes up. The midterm, you've got this move up price went higher, but strength, like the red line here shows, went lower. That's what you call a negative bearish divergence. Those two don't line up. At some point it's going to snap and roll over. And that's what I always say, from a certain point on, we're definitely going to see a rollover here, if it hasn't already happened, and then it heads lower. Negative divergence is going to force that rollover sooner or later. There's really no way around it. And short term, you can see regular divergence, meaning price drops, strength drops, price rises, strength rises, and that's actually a pretty positive sign. And that kind of positive setup usually leads to a rally, whether it's a relief rally or a continuation rally, but it'll definitely top out right here before it rolls over again. And in my view, in my personal opinion, we head into a bear market, along with the US indices. So basically we've got this move up, and the question is just how far it can go. But at some point, it's going to roll over, and in my view, still sometime this year and even within the next few months.
If Bitcoin can't get moving and gets hit hard by the conflict between Iran, the US and Israel, then it probably won't look any different for the altcoins. They don't decouple. We've talked about that a bunch of times. So how was last week for Ethereum and XRP?
These days, the Clarity Act is what links all the coins. And basically everyone, government folks and the banks too, were on the same page. Almost everyone. And a lot of people in the crypto scene. The proposal on the table, we'll take it now. It's a good one. It's a compromise everyone has to make. And then Coinbase came out and said, we're vetoing this. And regardless of the fact they can't legally veto anything, as a major player, in that whole situation, they said they're not really a fan of it. You can look at it however you want. I'm assuming that at the end of the day, the US government will say, this is how we're doing it. Rein Coinbase in and try to get the Clarity Act through in the form it's in now pretty quickly, either still in April, but by May at the latest. We said it's about yields on stable coins and active versus inactive holdings. And I think they've landed on a pretty solid compromise there. Sure, Coinbase wants to protect its turf, protect its revenue, but the banks want that too. And at the end of the day, you've got to be willing to compromise and move things forward here. Because I think the money sitting on the sidelines, waiting to enter crypto in a compliant way, is big enough to justify these steps and this compromise. And of course, Bitcoin suffers when the Clarity Act doesn't come. And in the end, our altcoins take a hit too.
Before we get into altcoins, how big of a break do you think Coinbase really is on the Clarity Act? You just said legally they've got no real way to block it. Can they actually delay the Clarity Act further? Or do you think, like you said, the US government will probably just steamroll it?
So yeah, there's always that official layer again, where everyone's like, yeah, we're a team, we've got to hear everyone out. And it matters that when someone's got an opinion, you at least try to understand their reasoning. But I think at the end of the day, when it really comes down to it, the US government's going to step in and say, look, Coinbase, if you don't want trouble with us, you're going to play along. And then Coinbase will get up there with the CEO, Armstrong, and say, yeah, we looked at it again and actually think it's good now. So yeah, I'm assuming if they don't want to totally blow their chances for the midterms, they're going to force this through with everything they've got. And the US government has plenty of leverage.
Yeah, there are already enough problems going into the midterms, even without the Clarity Act. Back to the altcoins, ETH and XRP, the weekly view.
Yeah, we've got the same structure here as with Bitcoin. Both on the weekly chart, we already had this chart up last week too. So yeah, first the move down like Bitcoin, then the bear flag, then down again, and now we're back in a sideways move. Same thing here too. down, sideways, down, and back to sideways. So the structure is pretty comparable. And that's why the two big altcoins basically confirm Bitcoin's move. You can see here the RSI is really low both times. So actually it's already at a record low here too. You can really see the difference here. Ethereum is performing better than XRP these days. Ethereum is already showing a slight upward trend in the RSI, while XRP continues to trend downward. And you can ultimately see that in the weekly candles as well. They're very small and show little movement. But what you can also see, and we didn't include this in the Bitcoin chart, is the MACD on the weekly chart, which is why I've added it here. Here you can clearly see how the same engulfing patterns are converging, and it's really just a matter of 1 or 2 weekly candles before they intersect and we move into the green zone. And this green zone, of course, signals an upward movement. And that could very well coincide with the resolution of the Iran conflict or an agreement on a set of rules. So from that perspective, keep an eye on Bitcoin these days. Bitcoin is the one who basically sets the tone here, and these two certainly confirm that.
2 weeks ago and again last week, we took a look at 2 AI coins, Taro and FAT. We don't have the chart with us today. We also discussed them on our Crypto Insights channel. You had already mentioned and posted the chart and the spectacular rise. We've already discussed in Munich why we decided to focus on these coins for 2 weeks, but we'd like to go over it again here. Why have these coins performed so differently during a difficult period compared to, say, traditional altcoins?
Yeah, we had Tao and Fett with us in the last 2 interviews. The reason we brought them up was these are 2 coins that can still do 70, 80% in a week, even in this market. So those hype phases you usually see in alt season are already popping up here and there. That was basically the whole motivation. And it was kind of just not really backed up. Like we just said, that's how it is. Like we explained on Saturday, there are 3 ways to invest. One option is to stick with the top 15 coins on CoinMarketCap. That's one side. You diversify. The other side is, if you want to get rich, you focus on 1 or 2 coins, hoping they really rip, so your portfolio goes along with it. And a third option is to bet on top sectors. And one top sector is obviously AI, and specifically AI and AI agents. And that's the base that, for example, Tau, Fed, and NIR are built on. And that could be another approach where you say, as an investor, I'm going to focus my money on 2, 3, 4 AI correlated coins. Why is that? Real AI agents have to do business. That's really the whole motivation behind all of this. They have to be autonomous. Offer services, sign contracts, be able to pay, be able to get paid, be able to hold and transfer assets like tokens, NFTs, and rights, and they have to execute smart contracts. So you can think about humanoid robots, you can think about self-driving cars, but you can also think about a fridge. Yeah, the fridge basically has to sign a contract with the store. It has to be able to order, it has to be able to pay. It might even need to take payments. It has to manage the items, and it has to be able to check that the whole process went through. And the moment a fridge pays or gets change back, it's not going to open an account at the Kreissparkasse in Fulda just to make that payment flow possible. It needs something really lightweight, something really simple. AI delivers the intelligence, and coins and blockchain provide the payment and contract layer, meaning when it orders and pays for goods, it needs access to a blockchain, and on that blockchain it swaps using coins as the payment mechanism. And that creates a truly decentralized economy. And you've got to be clear about this, Johanna. This is going to be a huge economy, because standing here today, in 4, 5, 6 years, each of us will have around 10, 15 AI agents around us that handle little services like that for us. And if you run the numbers on that, then the customer base in these networks, on these blockchains, will exponentially explode. And that's why the whole narrative behind it is blowing up right now, namely the agentic economy. All of that falls under this, and it's actually a pretty interesting space to invest in if you want to get into this space. Coins, crypto, blockchain, basically where blockchain, coins, and AI meet. And some people even say, kind of the other way around, that this whole easy payment setup, the easy exchange via blockchain, this whole smart contract world, like Ethereum shows, was built mainly because they knew AI agents were coming and they'd need a way simpler payment and contract framework to do business. That's basically the idea behind the whole thing. And besides XRP, that's the second area I'm heavily invested in. But this isn't investment advice.
Let's park that for now until fridges are actually doing our grocery shopping and managing what's inside. We don't have a roadmap this week. Nothing's changed except the date. We already talked about patience, and we still need to keep having it. And also, no roadmap still means no investment advice. Patience, like I teased earlier, is obviously something that follows you and also drags our followers along. It maybe gets on people's nerves too, understandably. It feels like this sideways range is lasting forever. And there are comments saying, well, Michel, something needs to happen soon. The breakout's got to come, and the whole thing is really becoming a stress test. How do you personally deal with these long wait phases until a breakout finally happens?
Yeah. Well, it's actually even a bit worse than you're putting it. The comment says he's always saying the same thing. Nothing new. And that's true. Yeah. I mean, I notice it myself when we prep this stuff, and you're right back in that sideways grind. What's a little reassuring is that there are stats. And there's this stat we briefly talked about on Saturday that says Bitcoin makes 80 to 90% of its yearly gains in only about 10 to 15 days a year. Which means the other 350 plus days of the year often add nothing or even drag performance down. And there's even that saying, if you miss the 10 best days in a year, your Bitcoin return is negative. When you look at that, it's obvious. It's sideways almost all the time. When it's 10 versus 350, and it's also clear, if you ignore that, you're just being ignorant. And I'll say this, no matter the asset class, but especially with our coins, you can see it in Bitcoin's sideways action. First the bull flag, now we're chopping sideways again, maybe hopefully building a bottom, and it's been going on for 2 months now. 2 months is 8 interviews. 8 interviews where I'm talking about sideways movement and ranging. But that's not on me. Like, I'm not seeing more in it, it's just that the statistic is pretty clear. So yeah, that's why sometimes I don't have anything new to say and I end up repeating myself. And that's backed up by a stat I didn't fake. It's just how it is. And that's just backed up by a stat I didn't fake. It's just how it is. That should be obvious to everyone. Like you've said a bunch of times, and in the intro too, it takes patience. And every now and then you get the breakout. That's 10 to 15 days when it really goes off. And I can tell you with a coin like XRP, it's even less, even fewer days where it shoots up. And ideally you want to be in for that. If you miss it, you're out of luck. And that's why this optimized in and out trading we always talk about with these stats in mind isn't that simple. You need a good feel to catch the right days on the way up and not be in it on the way down. So yeah, it is what it is.
It is what it is. But the hard part is those exact 10 to 15 days. They're not always in spring, not always right before Christmas, not like the year-end rally with regular stocks. You've got to stay alert, and you can't lose interest. You have to stick with it and maybe even spot the signs early. But Oliver, somebody always has to take the blame. That's life. I don't think I need to tell you.
The stats are to blame.
Okay, the stats are to blame. So we don't really have a choice but to be patient and see if anything happens. We'll be back and talk again next week at the latest. And of course, we're hoping that by then, especially with what's going on in the Middle East, things have calmed down a bit. Oliver, thanks a lot for today and of course for the look into the near future. Thanks for watching, and of course we hope you'll be back with us next week. Maybe by then it'll be one of those days with some good signs and the whole picture starts turning more positive. Just tune in. We're looking forward to it.